Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello friends, checking in on the market rundown. The S&P 500 bulls following through with the bull flag confirmation. The only two resistance levels left are 301.20 and 302.23, the all-time high, right on the verge. The daily higher low is 295.97, and as long as that level holds, the bulls have complete control of this daily uptrend. That being said, it's time to be cautious. Why is it time to be cautious? Because in 4 trading days, we have the FOMC. What happened before the last FOMC? Bulls were in full control and at all-time highs, and then we had a significant dump. So risk to reward, in my opinion, if we head into the FOMC strong, it favors risk more than reward, because we've already seen pretty much a 6% move in the last 12 trading days. So what I would be doing is either be all cash and patiently waiting for a reaction to the FOMC, or hedging some long-term positions. Now's the time where we want to be hedging heading into this event to protect against any potential pullback or fallout from whatever the Fed has to say. So I'm not going to be fighting this trend, but I'm also not going to be exposing myself bullish before that event. And if we were to run up real hard to a new all-time high, let's say we hit 305 by Tuesday of next week, I will probably open up some bearish positions just to be looking for a pullback in reaction. So I am still bullish this market. Ever since the August top broke, we were looking towards all-time highs, and that's where we are headed, but just a bit of caution. IWM still following through with a huge breakout. Big time laggard move. 159.23, 161.11 are the most important resistance levels nearby. That being said, we are very overextended. We have not really seen much hourly consolidation in the last 2 days, and a way to be watching for a pullback and to benefit from that is TZA. So TZA is absolutely crushed, falling off a cliff the last 3 days, and I'm going to be watching for a potential bounce play in TZA tomorrow. All depends on what the setup is in the morning, as always, but just something that has my eye as things are so overextended. QQQ, bull flag on the daily, confirmed as well. Next resistance level is 194.98, and anything above 188.91 keeps the daily uptrend intact. Bulls in full control. That's our new line in the sand. As long as the daily higher low holds, the bulls have nothing to worry about. Lose that daily higher low, and that changes things, then we need to zoom out to the weekly time frame and be cautious of some weekly head and shoulders patterns if we lose the daily uptrend. XLF bulls are continuing their move higher. We've seen a higher low on the daily time frame now 6 days in a row. When that pattern breaks, we're going to look for a daily higher low. Anything above 26.41 keeps the daily uptrend intact, and resistance is up at 28.53 from here. XLV following through. Resistance 91.53 broke. Now it's 91.69 and 92.17 as 2 short-term resistance levels. So again, if you go back and look 3 days ago at the video, I was pointing out everybody that was weaker, and these are all the names that are seeing big-time strength the last 2 or 3 days and providing fuel for the market to confirm this bull flag and race towards that all-time high. XBI, beautiful follow-through. Again, I'm looking at LABD tomorrow. Why? Because the hourly time frame has not consolidated for a higher low at any point during the last 2 days. That's overextended. I would love to see a gap up open on XBI for me to be looking for a bearish entry on. The hourly RSI, the last time it's been up over 80 on XBI, was back here at our top of 89.30, and it did not last long. So here we are up at 80 again for the first time in a long time, and we're due for some healthy consolidation. Resistance on the daily from here is going to be 83.74, and when we do pull back, we're just going to be looking for an hourly higher low to form, so it will just be a short-term trade if I do make any kind of bearish entry by trading LABD. Again, depends on the morning setup. The VIX is dropping down, confirming the daily bear flag, and really we're just looking down now at not a ton of clear levels from the way up. 1370 is the next level. Anything under 1650 is just a daily lower high. Gold saw a bounce play out today. The 4-hour time frame did see a little higher low and get some follow through. 1500 remains resistance after being support. So a decent little bounce, but we are just looking for a daily lower high. And we can see a daily bear flag here, so we have to be protective against that. But even if it's not a bear flag, still just looking for that lower high. Silver's bounce is underway. It's a potential daily bear flag. Again, just looking for that lower high to be set on this bounce. And it was a very notable day where if you have gold up at the high of the day, which is where we closed, and the S&P 500 at the high of the day, which is where we closed, to see the bear miners or the bull miners this week is extremely unusual. To not be closing at the high of the day when both the market and gold, I can't remember the last time I saw that happen. So I don't know what's up here, but something's up, and that's a red flag. This is a daily bear flag on the miners. Sometimes people have said, you know, maybe the miners lead the metals to a certain degree. I haven't heard that in probably years, but people used to say that. And maybe that's the case. Maybe we're looking at miners' weakness to potentially indicate the potential of silver and gold being daily bear flags as well. Not going to give up on these bull miners. They do have a clear base of support at 31, and using extended hours, 3082, 3101, 3127. So there's a base of support there, and we'll see if we can get any kind of follow through. But as of right now, the hourly trend change with a lack of follow through means caution to the daily bear flag. Oil had a bearish reaction to the inventory report, and then we had news come out that Trump potentially wants to limit sanctions on Iran, which means supply of oil will increase. So we pulled back really hard on that news. Anything above 54.81 is a daily high or low, but we've been trading for 3-4 months within a range of 50 to 61, and here we are literally right in the middle of that range. So right back in the middle on this bearish reaction. If we lose the daily uptrend, things are going to get real choppy and unclear as far as the short term. If we keep the daily uptrend, that's pretty much best case for the bulls, but we have to hold 54.81, and we will just be looking for a 4-hour lower high on any bounce attempt. Natural gas, I traded natural gas all over the place today. A lot of good trades, and we continued pulling back. So in the video yesterday, we highlighted the ideal setup. Hold the exponential support for a 4-hour high or low, set that 4-hour lower high, and then see the bear break today. And that would perfect play out in pre-market. And I jumped on the computer this morning at 6:30, and I said, all right, I see this setup here. Do I want to make an entry into DGAS looking for that 4-hour lower high, lower low? And I said, oh, I'm supposed to be preparing for the day and writing out the levels for the members. And I passed it up, and next thing I looked, the bear break followed through. And I said, bummer, I missed that trade. No big deal. I had other things that I had to pay attention to. Then I saw how extreme that dump got. The first hourly oversold conditions after a massive bull move on the daily time frame is a good time to be looking for a solid bounce. And to get there with the 15-minute RSI in single digits, or at 11, and the 5-minute RSI absolutely crushed. I love, when I'm looking for an oversold bounce, I love when things are straight off a cliff. If this were 5-minute bear flags on the way down, I'm a lot less comfortable than if it's straight off a cliff. So I entered right here, and I sold for half a day maker on this bounce, and then I got back to preparing for the morning. And it was only a half day maker because I was using smaller positions trading UGAS because liquidity is poor in extended hours. Then I saw we dropped to a lower low, and I said, man, that hourly RSI is still oversold. The 15-minute RSI is still in the teens. I'm making another entry. So I made another entry. I sold again. At this point, it was about a 1.5 to 2 day maker for my total trades on natural gas. And then I prepared for the open. And all of this was going on while I was live streaming and doing other things and answering questions. So I'm definitely a bit distracted. So I'm very happy just taking those gains as I have them. And then one more trade today, I definitely let it go too early. And it was a perfect play for an hourly lower high. Hourly resistance is a double top at 2596. And we see a pretty extended hourly bounce from the low. And we got up to 2952. So I had a great entry there. And my entry was literally right about here. And I entered DGAS. And at that point, natural gas was still very healthy. And I sold for a very small gain. And honestly, it was me just, number one, wanting to get off the computer for lunch at noon. And number 2, at that point, the 5-minute consolidation looked healthy. And number 3, I don't want to give back any of my daymaker gains that I've already locked in. So I locked in small win on DGAS. And had I set a stop at break even, I would have had another multiple daymaker. So that's a little bit of lesson for myself. But again, I love when I can just not care what's going on in the market between 12 and 1, because that's when I get off the computer and I go do something else. And that's important for my psychological well-being. So I could have had more money, but that's always the balance. Do I want to put in more time for more money? Do I want to put in time to stay sane? And in today's instance, I chose sanity. So looking at the pullback, we're looking for a daily higher low on natural gas. We need a 4-hour trend change back to the bulls for a daily higher low to be set. And at this point on the 4-hour chart, I actually like the hourly for clarity better, because we have our low, high of the bounce, trying for this higher low. Bulls need a bit more follow through. They want to get back to 256, and then we'll have an hourly equilibrium to be watching. But daily higher low is on watch. I'd like to see one more red day before I'm interested in a longer term bullish position. 250 previous resistance, multiple top of resistance, now support. I don't see a clear setup of what I'm going to like into tomorrow. Again, we'll see what tomorrow brings, but my focus is going to be on bull miners, bear biotech sector, and bear small caps with TZA. That's if I take a trade. The trade has to come to me. I will be perfectly fine not trading tomorrow, because it's been a great week so far and a great September so far, and I'm not going to force anything. So I appreciate you watching, and we'll see what tomorrow brings. All-time highs in sight for the S&P 500, but things getting a bit extended. We don't want to get caught up in FOMO and euphoria, and the FOMC is approaching. Hope you have a great night. Thanks for tuning in. Do good things. We'll see you tomorrow.